Hello, this is George, and this is part B or part two of the video I did this morning earlier. I don't know if I call it part A or part one, but anyways, as you can see, the market has had a breakout, and we saw that initially on the first video. I'm trying to remember how I can squish this down. I think I do it like this, and I can do this here. There we go. We had the early breakout. The market immediately reversed course, as usually happens when breakouts occur. This was using a 6-minute bar breakout plus a buffer. And a lot of times people are just sitting there watching these things break out. A lot of people like to use a 30-minute breakout or a 60-minute breakout to get into the trade. And a lot of people are sitting there watching that occur, and they'll automatically go ahead and start shorting at those levels. I added a 0.4 or 40% buffer to try to force the market to travel through that breakout in hopes that it would continue in that direction. And it does sometimes. Sometimes it doesn't. This actually immediately failed and almost came back down to our trailing stop mechanism, but then rallied, of course. All this information about the breakout and the fake breakout has probably been filtered out of the market through trading. So now maybe the true essence of today's trading is being illustrated now. We don't know. We'll see what happens. A lot of news events. It's a Friday, so we can see what will happen later today. But anyways, let's get on to how I programmed this. There we go. This is a strategy tracking indicator, and I like to do those so I can visually see what's happening and I can follow the strategy. I know exactly where I'm going to buy. I know exactly where I'm going to short, and I know exactly where I'm going to get in and out. Out of these trades. So let's go over the strategy first. It's a very simple strategy. This chart is plotted on a local time exchange or a local time. So the opening bar is 9:35. The market opens at 9:30. This is a 5-minute bar, so the first bar stamp would be the open time plus the bar interval. In this case, 5 minutes plus 9:30 is 9:35. That's important to know when you're programming this. So let's look at the code. I use the start trade time as an input. You wouldn't need to do that. You could just say get session 1 start time. It's a function call or a keyword or something like that. My start trade bars, I want to be 6. I don't want to trade after 15:30. Breakout vol per is 0.5. This is not what I set up in the values of the strategy or the indicator. This is just default value, and you can change those via the input, as you know. I got the trail vol percentage, and I got my break-even dollar stop. A lot of times I'll go ahead and start programming these things, and I will create variable names on the fly. I like to use this Camelback, I think it's called Camelback form for my variable naming. I always like to start with a lowercase, and then every word or syllable that's combined in the variable name, I like to capitalize it. It just makes it easy for me to see and to read. And the easier the variable name is to read, the better off you are, because you know what it's doing. And you always should use variable names that make sense. Like longs today makes sense. Longs today is how many times have I gone long today. Shorts today is how many times I've gone short today. So basically, I program this stuff on the fly, and then I go back and I fill in the var section here with my variable names that I have used, and any values that I need or would like the user to modify or optimize, I put in as an input. That's all there is to it. Okay, let's start here. If the time is start trade time, which was 9:30 plus bar interval, which is 9:35, then it's the first bar of the day. So I set up all my stuff that I need for the first bar of the day. Okay, I go ahead and set everything to 0, or I set the short trailing stops to a large number, and my high today and low today I set to a low number and a high number, because I'm going to be setting those myself. Now in TradeStation, they do have that low D, high D function now, and you can put a 0 in there. But a lot of times I've discovered that value isn't exactly what I want it to be. I need to investigate that further and see what it's actually extrapolating from the data. But in this case, I want to do it myself just to make sure it's right. So I set all my variables at the beginning of the day. Basically, you're starting with a blank page at your first part of the trading day. Okay, high today is going to be the max list. Remember, max list is takes the highest of 2 values or 3 values or 4 values. You can put, as long as you separate them by commas, you can put as many variable names in there as you want. So I'm going to take the high of H, or high today. High today initially is set to 0, so it automatically, whatever the high is going to become the first value. And then if it keeps going up, high today increases. Same thing goes for low today, except we're looking at the min list. When the low is exceeded, goes below low today is updated with that low. Okay. MP, which I love, market position, because you can index it as a bar array. And one day I need to go and tell you what a bar array is if you don't know what that is. But I convert a market position, which is kind of like a function, to a bar array. And I can index that bar array on every bar, which is kind of neat. This is very important. I got to keep my bar counts. I'm counting every time a new bar occurs, and I set bar count to 0 on the first bar of the trading session. And so the next bar after the first bar will be bar 1. Okay, so when bar count exceeds my start trade bars, or equal to it, I should say, what I do is I start a lot of calculations, and start trade bars is an input. Start trade bars right here is 6, and that's a variable that can be changed. I'm 6 minutes into the video, just checking. So let's look at that. What am I doing? Okay, what I'm doing is I'm calculating my volatility amount as the average of the ranges of the start trade bars. So what I'm doing is I'm keeping track of the average range on a trailing. It looks like I'm doing a trailing value here. So every new bar, I recalculate 6 bars back. New bar, 6 bars back. New bar, 6 bars back. So it's a trailing volatility amount. If bar count equals the start trade bars, which means I'm on the 6th bar of the trading day, or the 7th, I don't know, 6 or 7. I go ahead and set my long stop to the high of the day plus the breakout vol amount percent times the vol amount. And I think in the strategy settings it's set at 0.4. Okay, so I got my long stop and my short stop. And I only set that one time because bar count will only be equal to start trade bars one time during the day. Okay, so once I set that, that's locked in. Long stop is locked in, short stop is locked in. It's no longer updated. If I'm behind, if the time is less than the end trade time, which I think was 15:30, I go ahead and say, okay, let's fix this code real quick here. I say if long trades today equals 0, no entries, no long entries, then I'm going to buy at the volatility breakout on the next bar at long stop. I want it to be a stop. Same with the short side, is still short. Okay. My trail vol amount will be equal to the vol amount, which in this case is a trailing volatility calculation, times the percentage that I want to use. And I don't exactly remember exactly what it was in the strategy, but we can look at that. Okay. So if I go long based off this here, if I break out, which we did this morning, boom, right there, I want to go ahead and instigate a trailing stop mechanism. Okay. So longs today is equal to plus or equal to 1, and that's a unary arithmetic operation, I guess is what you call it, instead of binary. I could say longs today equals longs today plus 1. This is kind of a shortcut. It's kind of just there's a specific keyword for it. I can't think of it right now, but basically it increments longs today by 1 every time this logic is hit. Okay, so if the current close is greater than entry price plus my break-even dollars divided by the big point value, I need to do that to get it into a price value. You don't want to compare a price to a dollar value. You need to compare a price to a price value, and by dividing by big point value, I convert dollars into a underlying price value or offset or whatever. But it's comparing apples to apples. Okay, if that happens, then I'm going to pull my long trail up to at least the entry price or the long trail, whichever is greater. So if long trail up to that point is not equal to the max entry price, I pull it up by using the max list. I take the larger of the two values. Okay, said that it hasn't occurred yet. I need to have a long trail no matter what. So what I do is I start taking the max list of the this close of the prior bar minus the trail vol amount, which is the running volatility amount times a percentage, or the long trail. Initially, long trail is 0. So on the first bar after entry, I go ahead and set the long trail stop. It automatically is set to sell minus, the close minus the trail vol amount. Okay, as the market moves up, this is a trailing stop mechanism. Okay, and a lot of people, it's difficult to do that, and they do have that capability built into TradeStation, but I like to do it myself to make sure it's doing exactly what I want it to do. So this is how you create a trailing stop mechanism. It's a ratchet stop, meaning that it never goes down. It always follows the market, never moving down, always going up. Okay, so then what we do is we go ahead and set our sell directive to get out at that long trail stop. Basically, the short side is just the opposite of it. So I'll save time and I won't go over the short side, but the code is available on my website at georgepruitt.com, so you can download it and play with it yourself. Now, once I did this, I thought, well, that's a pretty cool system, but the whole objective of this experiment or project I wanted to do was to be able to draw squares on the chart. I saw that on something, and I said, oh, that's cool looking. So I designed the trailing stop mechanism and the breakout for this strategy initially as an indicator. So I said, well, let me go ahead and do the strategy first, and then I'll do the indicator second. I'll use the exact same code. And if you look at my indicator code, there's a lot of similarities. Let's pull this down. I did change that. So let's go to new vertical tab group. Let's pull this up. This is the strategy, and let's go ahead and compile that real quick. So get that star off there. It's running through the history. But if you look at the code, you're going to notice the code is almost the exact same for the indicator as it is for the strategy. There are differences, but more or less they're the same. I use the strategy as a template to create the indicator. Now the indicator does exactly what the strategy does, calculates the high of the day, the low of the day, the bar count, all that stays the same, does all the same calculations for other volatility. But in this case, I have to keep track of if I'm long or short myself, because you can't look into the current market position from an indicator. It doesn't have that value because it's not designed to, it's not a strategy. So you have to kind of keep track of that stuff yourself. So I had to do that as well. I calculate my long stop, my short stop, and then I plot the long stop as a buy breakout and the short stop as a short breakout. This actually turns out to be the shaded area, the rectangles, because my breakout is basically the high of the day plus that buffer amount. So plot 1, I wait until I'm 6 bars in, and then I go back in time. You see this for loop? I go back in time and create. I'm not trading in the first 6 bars, so on the 6th bar I can go back in time because I'm not going to be trading. So I can go ahead and plot that initial rectangle, the yellow one right here, by using a for loop. Because I'm sitting on this bar here, I'm not trading up to this point, I'm trading after this point, so I can go ahead and fill this shaded area in by using a for loop. And basically I just use my long stop, which is calculated, and I go back, start trade bars -1 at 6, -1 to 0. So it'd be 0 to 5, which is 6. That makes sense now? Okay. So that's how you create your yellow rectangle. Right there. Okay. Once I'm beyond the 6th bar, I still need to plot that other gray-green rectangle. So as long as my time is less than in trade time, and I need to do work, basically. And what I need to do is I need to keep track if I've entered a long position or not. And that's what this code is doing. Okay, I'm saying, okay, if long today equals 0 and the high of the day exceeds or equals the long stop, that means I took a long position. And in this case, MP is not extracting the current market position because you can't do that in indicator. MP in this case is my own homegrown variable that I'm using to keep track of what theoretical market position I'm in. So I have to keep track of my theoretical market position, my theoretical entry price. It's got to be the max list of the open or the long stop. I do the max list of the open in case the open gapped above the breakout, which could happen. Probably very rarely happens, but it could. So I go ahead and keep track of that. And then I increment my longs today. Shorts today, same thing. I keep track of the short breakout and the open and the low in this case. Here I'm checking the low versus the short stop. And then I assign theoretical market position, theoretical entry price, increment shorts today by 1. But that breakout, that long stop, is still the same. It hasn't changed because it only is calculated one time during the day right here. So I'm going to continue extending that value, that plot value out, and the long stop and the short stop. And I use the bar high and bar low like I showed in the first video to draw a vertical line from the bar high, which is the long stop, to the bar low, which is the short stop. Okay, so that creates that greenish gray extension rectangle. So after that, I need to calculate my trail vol amount the same way I did in the indicator, the strategy. And I need to keep track, and as you can tell, look at this code, it's very similar to the strategy. So if I am long and the close is greater than my break-even point, I pull the long trail up to the entry price or the current long trail, whichever is greater. If that doesn't occur, I need to have a long trail in place. So I take the close minus trail vol amount and the long trail, and then I plot that as a, I think it's blue or red, I can't remember. And I do the same for the short side. So basically, I used the strategy that I created, which is very simple, and you can use this as a template to create your own day trading strategies as well. You can change anything, the number of bars, the volatility amount, you do other things with it too. The key is, if you want to keep track of a time-based breakout, is this, you got to keep track, you got to reset everything at a certain time and then start keeping track of things. Now, let's see if what's happening right now currently. Aha, the market has had a pullback, but it's gone back up. So the true essence of the day may be being established. And as this bar will complete, this rectangle, a shaded area, will continue. And our trailing stop, based on a new high, has been moved up. So the trailing stop for a long position is red. So we'll see what happens. Now, a lot of day traders might say, you know what? I took all this pain. I suffered through it. I almost got stopped out. If I can get back to a break-even point, maybe I should take it. I've done that trick before. Sometimes it works out, sometimes it doesn't. But as you can see, let's look at a couple trades real quick and see, make sure our trailing stop mechanisms are working like they're supposed to. Here's a beautiful trade. Look at that. Wow. You don't get those very often. A true breakout that carries on, and then you have this consolidation period, and you get out, and then of course the market continues up. But it looks like you didn't get hurt too bad by getting out early there. Let's see another trade here. There it is. You're getting out in the long trail stop again. These all look good. Okay, here's the days that make the breakout pull your hair out. I mean, you pull your hair out in these days. I mean, you had this beautiful initial range here. It's wide range there. And then you had the market rally like it was going to go break out to the top, and then it falls apart completely very quickly. And then you sell, and immediately the market, there's people hanging out here, running those stops. And then, of course, the market rallies, and you buy on the buy breakout. Wow, this thing's going to take off to the moon, and bam, that's a double whammy day. And that happens quite often. If it was easy with just a breakout system, we wouldn't have any markets. So here's another example of a double whammy. Those are ones that kill you. This one doesn't look like it's too bad because the first 6 bar range is tight, so that doesn't hurt you too bad. Another double whammy here. Range is a little wider. That hurt more. Here's a what we call a trend day. Market moves up, straight up, keeps going straight up. You get out with a nice profit. You even actually beat the exit. I mean the end of day exit. So you got these mixed in here. So this system is going to trade every day, because more or less you're going to break out for the first 30-minute bar. So it's up to you to filter these trades out. The one thing I would probably do is measure that range for the first 6 bars, and if it's too wide, the risk is too much to trade, to day trade. So you could filter that out. There's just a suggestion. So, but this, the whole purpose of this experiment was to show you how to create a, how to do the shading with the rectangles, and also to show you how to do a strategy tracking indicator, and how to create an indicator by first creating the strategy and then building, taking that code and actually just inserting it into an indicator and taking out the buy and sell directives, and you've got it made. Okay, that's the end of part B or 2, whatever I called it. So I hope you find this useful, and like I said, all the source code is on georgepruitt.com. Thank you.